portfolios right now, what these guys are doing with their portfolios, and potential trade ideas for the audience. They're going to be taking a look at a lot of tickers. We also want some ticker suggestions from the audience. We're going to be analyzing a lot of stocks today with a focus on what's outperforming the market and ultimately what's going to make us some money, right? Right? Yeah, we can all get behind that. All right, so first, to kick things off, IBD Live is for informational and educational purposes only, so please make sure to do your own research before making any trade. We are not making trade recommendations. We are going to also be looking at questions from our virtual audience, so welcome also to our virtual attendees joining us out there. And without further ado, let's get some tickers on these guys' radar before we really start diving into the market action today. And Justin, let's have you go first. What tickers are on your radar right now?
You know what? Let's we can look at CMG, Chipotle. There's one right around the corner from me. That's where I've been eating a lot this week. So yeah, let's take a look at that.
So revenue is going to explode this
exactly. It's going to be
quarter,
like, hey,
right?
someone got the garlic guajillo. So
okay, great. Harold, what are you looking at right now? What's coming up on your screens?
Well, good morning, everyone. I'm going to take a look at Waste Management, ticker symbol WM.
All right, we'll check in on that. And Jim, what are you interested in discussing right now?
I like Shockwave a lot.
Shockwave, SWAV. All right, another one to watch there. Thanks, panel, for those tickers. Also, of course, what's on everyone's minds and what we talked about yesterday was the Fed and the market's reaction to that interest rate announcement. So we are going to get the team's real-time reaction to day two. I mean, we had a pretty ugly finish to the day, so we'll get into that. But first, Justin has the headlines.
I do, straight from Ed Carson in the newsroom at LA. So we had futures going back and forth all morning, you know, and they were basically flat. Looks like we opened kind of flat, a little bit down. Yields were jumping recently up about 13 basis points to 3.64 roughly. Oil, nat gas down, up, excuse me, and nat gas down slightly. Jobless claims came out. They were up 5,000 to 213,000, but the prior week was revised down to 208,000. Economists had expected to rise to 220. Continuing claims for the most recent available week fell 22,000 to 1.379 million. So, hey, we've got tight labor markets, right? That's what the Fed doesn't want. And, you know, you talked about the Fed. There was a lot of central bank action. You had the Bank of England raising by 50 basis points to 2.25, as expected. Bank of Japan, as expected, left rates at negative 0.1%. The yen fell to a 24-year low, but the BOJ has intervened in FX markets. Swiss central bank upped rates by 75 basis points to 0.5%. Norway upped rates by 50 basis points to 2.25. Indonesia raised 50 basis points to 4.25, more than some estimates. Turkey cut key rate to 12% from 13%. Their inflation is at 80%, and President Erdogan, he believes higher rates cause inflation. So SEC reportedly will let Wall Street firms keep getting order flow payments. Good news for Robinhood, Virtue Financial, and a few others. We had Accenture. They had EPS rising 18%, slightly beating. Sales grew 15% for Accenture. That's ticker symbol ACN. Full year 2023 EPS guidance a little light. Accenture was upping their quarterly dividend, and they also okayed a $3 billion buyback. CRM, we were talking about Salesforce, fiscal 2023 revenue at $30.9 billion, $31 billion from $26.5 billion in fiscal 2022, and $50 billion in fiscal 2026. So home builders, KBH, KB Home, and let's see, who else did we have? I think we have another one in there. But KB Home reported a 79% EPS gain. They beat views, but revenue, while it climbed 26%, it missed. Lennar, there we go, also reported mixed results. EPS up 58%, but sales falling short with a 29% gain. Home builders indicated housing weakness ahead. So KBH reported declining orders. Darden restaurants, that declined in line with views. Sales rose 6.1% to $2.5 billion, just missing. Olive Garden parent reaffirmed guidance. DRI is down. FDS EPS rose modestly, but missed views. Lilly rose modestly in pre-market trading after the FDA approved its cancer drug, Retevmo. Let's talk a little bit about autos. Li Auto will hold an early launch event on September 30th. So this is for its L8 hybrid SUV. It's sort of a scaled down L9, and the Li 1 is going to be phased out after October. Let's see. We also had Tesla has a issued a recall for nearly 1.1 vehicles in the US due to faulty window automatic.
1.1 vehicles?
1.1 million.
Thank
Excuse
you.
me.
There
Yes,
we
yeah,
go.
yeah, just one. That one in
You know.
California, right? So
One tenth one.
they're going to do an over-the-air fix. So again, it's a little bit of a yawn for Tesla. So Toyota expects to make 800,000 vehicles in September worldwide. August, Toyota said it wanted to make 900,000 a month from September to November, but now sees 850,000 average due to ongoing chip supply woes. And Honda will cut output car at 2 Japanese plants by 40% in early October, citing some supply logistic challenges. And then along with Ford's warning, the announcements show that chip overall supply chain recovery a little weaker than expected for the auto industry. B of A also cut Intel, AMD, EPS estimates, citing further PC weakness and the need to get rid of inventory. We also have some Costco numbers coming out after the close today, FDX final numbers after last week's warning. We saw what happened to FDX, so maybe we'll get some better guidance there and see what happens. And I'll turn it back over to you, Allie.
All right, thank you so much, Justin. Also, we will be taking questions a little bit later on, have a lightning mode. And so looking forward to that. We'll also be looking at questions from the virtual audience throughout the next 90 minutes. So keep those questions coming. So first, let's get a show of hands. Who out there is feeling bearish right now? Anybody? Yeah, don't be shy. Okay, who's feeling bullish? Anyone feeling bullish? Okay, that's nobody. So if there are, Jim, if there are more bears out there right now, that sense of bearishness, could that actually be maybe a contrarian indicator? Could we be finding a bottom if we're starting to see a lot of bearishness out there? I know you've been bearish short term on this market. Why is that?
Well, I mean, just everything about the market. It's new lows exceed new highs. All 3 trend lines are heading down. I mean, but let's talk about sentiment. There are an enormous amount of bears. It's almost record, but it is not a signal. It's a condition. So it matters in the potential upside, but it doesn't tell you to go long. It's irrelevant until the trend turns up. And I don't mean just a follow through day. A follow through day,
which we got to define for our lovely audience here. It's a good signal about a potential new uptrend in the market.
Correct. It would signal that at minimum, a short-term uptrend may have started, but it doesn't guarantee it. If you undercut the low with a follow through day within 3 days, it's about a 98% probability of failing. So the first thing we need is a follow through day and then a durable trend to ensue. And then you can start to really allocate. But so bearish sentiment is great to tell you that things have been like a spring, you just crush it up. Well, when that releases, it's going to be a phenomenal opportunity to make money. But until the trend turns, it's all irrelevant. You see all these studies about 100% of the time when the market's down this much, this time in the year, 12 months later, it's up 28%, and 2 years later, it's up 40. Well, that doesn't matter if it goes down another 20 first.
Yeah,
you have to get the turn in the market.
Right. Yeah. So timing is everything. So it seems like the time to go long, like you said, we still need to see some improvement in the market first.
A drastic improvement.
Yeah.
Well, and let's not forget, let's just add one thing to what Jim was saying is we also need those individual stocks to be, so you get the market having its follow through day, but you also need something to buy and you need those to make progress. That's where our problem has been lately is that we'll start making some progress. And then as soon as we do, the rug gets, brought out from underneath you.
Exactly. I mean, if we can count the true market leaders, those growth leading stocks, a couple of which we talked about in our session yesterday afternoon. If you caught that, you mentioned Shockwave, one of them, Celsius, InPhase. I mean, if we can count these leaders on one hand, I mean, that says something. We want to be like kids in a candy store. I know that's something that you guys have said. Harold?
Right. You need that. We want to look for a broad-based uptrend. It'd be great if the market, once the market is going to go up eventually, but again, like Justin just said, you got to have some stocks to follow the market. But that's why you need to stay engaged, be ready for a potential break.
All right, well, Justin, let's talk about some key technical levels to watch. I especially want to focus first on yesterday's bar that we saw. As we mentioned, it can be quite a roller coaster ride on the Fed announcement days. So here's a look at the 5-minute chart. Look at this intraday chart. I mean, making me a little seasick.
Yeah, well, I'm just
looking
gonna
at
say,
that.
I mean, we predicted volatility. Look at us. We were right. I mean, how is that? Who would have known that would have happened, right? And this happens a lot of times, right? You get the Fed announcement, you get a reaction, then a counter reaction, and then a counter reaction, and then the next day it could all start over again. So that's one of the reasons why you kind of have to look at it and say, okay, how am I positioned right now? Am I okay with the cushion that I have in my stocks? Am I, is this something that I'm going to be able to withstand that volatility, or am I going to be shaken out at any little move? Well, then guess what? You might as well almost sell beforehand and save yourself the trouble, because otherwise, at least for myself, I know I'm that guy that will sell right at the low unless I'm positioned properly.
So speaking of positioning, it seems like you guys are pretty light. Maybe some test buys. Jim, are you in at all, or did you just go completely to cash before the Fed decision yesterday?
I actually had a fairly big short position on, but I was traveling en route, and so I liquidated 90%, 75% of it. And that was the right thing to do, although it would have paid huge had I kept it on, but it was just too much risk. But let me address this a tiny bit.
Yes.
People get so granular. In other words, what's going to happen this afternoon after the Fed meeting, as if somehow that changes holding a stock for 91 weeks, which is the average length of a true market leader. Right. They're talking about minutes.
Yeah.
It's like the Friday close after a Fed meeting is so much more relevant than the close of the day. It's just, we're going to shake out, people are going to reposition, and then the trend most likely will resume in the direction it was going before. A major trend change is a rare occurrence. So I know there's a ton of volatility, but I just don't worry about it that much. You should be positioned for the trend before the move and then let it go. But as far as stocks I'm watching, it scares me that I'll give you 4 or 5 names and everybody in this room or who's using our method is in them, which makes them overly crowded. And that would be, LNTH, Enphase for solar, Celsius, Shockwave. That's 5 names, and you alluded to it. 5 great growth stocks cannot support the broad market of 5,500 stocks.
Right.
We need, like you said, a plethora of names. So many names that there'll be so many breaking out all at once. You'll be like, I can't discern which one is really the true market leader. So we're so far from that right now. 5 stocks can't hold up this market. You said the trend is not durable until we get more. I completely agree. We're a long way from there.
Well, and we talked about this last night. We had dinner, and I mean, that advanced decline line has not been looking great. And I mean, that really peaked in February of 2021.
Yeah, and let's talk about what that is.
Yes, okay, so it's just basically, let's tally up all the advancers on a particular day or week, whatever time frame you're looking at, and the ones that decline for the day. And when you get this trend of more decliners, and what was odd was that you had, right, in 2021, the S&P 500 had a good year. You look at it at the end of the year and you're like, wow, what was it, up 20%? And you look at the advanced decline line, and that kind of tells you this was not broad participation. There was a lot of destruction. And, we talked about this yesterday. You had all of these COVID plays like the Pelotons, the Zoom video,
right.
The DocuSign, all of these COVID plays that were already getting hit very hard starting in February of 2021. And so that just continued.
I mean, a good proxy also for that weakness and growth that we saw before the market broadly rolled over is ARK, ARKK, right? That's something that we've talked about before. Here, look how dramatic that COVID move. So a lot of those names that you mentioned, those COVID winners in 2020 in this, but just a massive sell signal and top here, Jim, for ARK going back to February 2021. And we've seen a lot of weakness since, maybe starting to come back to life, but even for stocks like this, more of the speculative growth names, it seems like there's a lot of work to do.
Well, a name like this is typical of a bull market. It runs up for a year and a half, 2 years, and then it tops. And I ran a study maybe 10 years ago, and I proved there's a 2.4 or 2.7% probability that it will ever recover.
2.7.
So it's buried. If you guys are in names like Square and PayPal and all these names that were COVID names, you're fighting a 98% probability that they will come back. The odds are against you. You need to look at the new leaders, the new high list, like the names we were talking about. They look okay, pull up Enphase in relation to this. there was this thing on,
Stark contrast.
remember Sesame Street? One of these things isn't like the other.
Right.
I mean, we're just looking at apples and oranges. I don't know why people are dealing with these names that have been buried.
Yeah.
Because they're stuck in them and they are hoping, and they don't want to sell at a loss to
Yeah.
go buy good merchandise. But that's why the market has a lot of people who don't make money.
Well, no one wants to be wrong, right? And when you
Right.
finally do that sell, you're admitting I was wrong. And at this point, you're admitting I was really wrong.
Mhm. So another thing about market conditions and something that can give us a clue about the health of the market is these couple of leaders that we're talking about over and over, is how they can they continue to hold up, Harold. So LNTH was one that was brought up. So let's go there, medical product stock. This week, it seems like a potential character change. So if we're starting to see more leaders breaking down, that can't be good.
Right. Up until this week, it was looking pretty good,
Yeah.
but it's had a major sell-off now. If you look at it, I don't know if you have you have the daily chart up.
I can move.
Oh,
to the
okay, your weekly chart.
Yeah, so
You
that's the
see,
weekly.
yeah, it crossed down below the 10-week moving average. It's done so, the volume's kind of mediocre, but the fact that it's traded down below the 10-week so far this week, it's at the bottom of the range, not a good sign, not a sign of leadership.
So what are your thoughts on that, Jim? Another one bites the dust. We now have, instead of 5, we got 4 to count on one hand.
Well, I think these names are like basketballs underwater, and they've popped up, they've shown themselves. And in my newsletter, I have this section called Candy, and I always put all the leaders, even though they shouldn't be bought, you should keep your eye on.
Right.
Now, if the bear market continues down, and we have not just a test of the lows, but a further leg down, these names are all going to get crushed. But they're going to probably most likely be the ones to reemerge on the other side. I mean, these stocks
So
are
we can't
showing.
give up yet on Lanthus, is what
Keep
you're
your
saying.
eye on it. I mean, they're probably in an earnings upcycle of maybe, a several beat and raise quarters. So if the general market compresses it down, when the bear ends, it's going to pop straight up on that next, and that'll be most likely a huge gap up in earnings. Like the stock will gap up 20–30%, and then people go, oh, it's gone too high. That'll be the beginning. But these names will all follow. A trout cannot swim up Niagara Falls, no matter how strong the trout is.
Exactly.
Well, to that end, let's just point out there's a blue little squiggly line, underneath the price action, and that's called the relative strength line. It compares that particular stock to the S&P 500. And this is one of the things that we look at a lot because we want to see, hey, is this stock, how is it performing versus the market?
Right. If we're going to be picking
yes,
stocks, we
right.
want that outperformance.
We want the outperformers, absolutely.
Yeah.
So as much as it's not great that Lantheus is undercutting its 10-week moving average line, let's put it in the context of what that relative strength line looks like. Look, the market's down. So Lantheus is coming down with the market, but if that relative strength line is holding up, then it's still worthy of being on a watch list. It's not destroyed.
Yeah.
And it's certainly not a PayPal, or
Yeah,
Square.
exactly.
In addition to that, you want to say who owns it. You can see what kind of ownership the stock has. That can give you a little conviction as to, should I be holding this stock or not? Should it be on my watch list?
Yeah, is that big money in there? Does it have that big
Right.
money backing? And so let's talk about that a little bit here. We do have 2 names from the IBD Mutual Fund Index owning this stock. We've got Lord Abbott, a Lord Abbott fund, which was featured on the podcast,
Right, yeah.
episode dropping today.
Yeah, that was Tom O'Halloran
Yep.
that we had on the podcast from Lord Abbott. And, he's someone, and his whole group, they're in line with a lot of what we do, a lot of this trend following, a lot of technical action. And so, yeah, the fact that they're in there, it is a little bit of a seal of approval, right? When you see
Right.
some of these IBD mutual fund names in there, it lets you know, hey, there's some guys that have done some real kicking of the tires here,
Right.
and they're getting in.
And at least for the watch list, because if you're managing a mutual fund, that we have the luxury as individual investors, right? We don't have to follow the same rules that mutual fund managers do, with it being so tough to their time horizons are so much longer. So getting in and getting out, they can't be as nimble as maybe we can. I know you manage a lot of money, so maybe but from individual investors that perspective. But I want to clarify something here, because you said, well, we have these leaders, they're going up, they're outperforming, but we shouldn't be buying them. And why should we not be buying stocks in a bear market if these stocks are going up?
Well, because
The odds are against me. Is that what you're saying?
the odds are against you, because the volatility is so high that even if it is outperforming, the shakeouts are going to be so violent, you're going to get bumped out of them. I mean, the method we use is predicated on many variables, but relative strength is probably the strongest. And if you're sorting for relative strength, even in bear markets, you're going to find the very, very strongest stocks. That doesn't mean you should try to buy them against the tide. Again, in my candy section, I put all these names and I say, do not buy these names. It's a watch list for when the market turns. So I think a lot of people misinterpret that, or a lot of people want to pull the arm. They're in the market for the wrong reason. They want to pull the arm on the slot machine. They want action. They're not really trying to implement a system to make a killing. They want to go, go, go this afternoon on the Fed meeting.
Exactly. And I'm excited to speak with you a little bit later today, one-on-one in a session to talk about how to really handle these winners and looking at those turns in the market and past market cycles, how you've handled them. So we'll dig more into that at our session. I believe it's at 12:10. So we hope you join Jim and I back for that, for navigating the market and handling those true market leaders and riding the wave. We'll just give a quick little tease here. Riding the wave. It's kind of like surfing. If you want those monster moves in some of these big winners, you kind of have to have your surfing mindset, right?
Absolutely. You have to be preparing before the big waves come. You have to kind of go to where they are. That would be get in the right sector. You have to handle them right once you're on them. I mean, the parallel between surfing and investing there's almost a direct correlation. The preparation, the mental conditioning, like the physical conditioning, the duration of the wave, how big's the wave, how big.
Patience for the right wave, right?
Waiting for the season when you have to travel the world, go to Fiji. Go Google Laird Hamilton's video with Charlie Rose. Charlie Rose says, what's it like to catch a big wave? And he gives this definition of about 2 minutes. And it's just an unbelievable parallel. I mean, it should be watched by anybody who's a growth stock trend follower.
Right. Thanks so much for that. So stay tuned for more on that discussion. Let's move back to leaders taking a hit today or this week. Harold, let's have you take a look at CELH, another stock on our radar, down below that 50-day line for the first time. It's the red line on the chart here for the first time in this explosive move. So it's testing the lows from this recent structure here after that strong move on earnings. What do you think about where it's at now? Is it still okay? Is it still, in terms of a basketball being underwater, are we still seeing that strength here with Celsius, or is this a bad sign?
It's not a bad sign. It's
You're
okay.
not too concerned.
Right. I wouldn't be too concerned if you have a position in the stock. I wouldn't be too concerned. Like myself, I don't have a position. I have it on my watch list. Now, the market is in such a condition that it's taken down a lot of things. So Celsius, it's been a leader. It needs a rest anyway. It's been pausing for the last, several weeks, about 5 or 6 weeks, which is a good sign. It's still showing signs of just pausing. It's got some tight trading on the weekly chart. No need to panic with this stock if you have a position in it or you're watching it. Just keep an eye out.
At what point would we need to panic?
Well, it gapped up. I think it was before the earnings, but you have that gap over there on the left side, right around that 109.74 area.
It's testing the low of that gap.
Yeah, it's testing the low. Yeah, you don't want to see it. You'd like to see that gap act as support for the stock. If it goes down in below that gap, then I would be concerned. If you own the stock, I would say, okay, I'm going to take some off, lock in some profits if I have it, and see what happens from there.
All right, thank you, Harold. Justin, let's have you take a look at Wolf in the semiconductor manufacturing group, down about 5%. Does look like volume is heavy, perhaps some resistance at that 120 price level. It bumped its head up against that. It's coming down. Let's also get a show of hands. Anyone out there feeling a bullish on semi stocks, or how are we feeling out there? Okay, there we go. Thanks, you in the back. It seems, speaking of new leadership, we've really seen that pivot from the NVIDIAs and AMDs of the chip world into some of these newer names. What do you think, Justin?
Well, yeah, and we talked about Wolfspeed yesterday. Used to be Cree, so it's been around for a while, right? But
it's reinvented itself, right?
Yeah, a little bit. It's getting in. Right? Cree was LED, and now it's, hey, let's get silicon carbide and get these traction inverters and into EVs and everything like that. So, at this point, right now, again, a lot of things are coming in because of the market. We're still not in those conditions. So while this is what's on our radar, and frankly, I mean, look, we've got that green line on that. That's the 21-day moving average line. It hasn't even crossed that yet. So yeah, it's no fun to be in something that's going down 5%. But it really, I mean, it's not broken or anything. But it just kind of goes to show you this isn't necessarily the market you want to be making too many tries out there. Until you get more traction in the market, some of these pilot positions, while it does give you a way to kind of gauge the strength in the market, you should expect a lot of them to fail. And so you might not want to do too many. Don't over trade in a market like this, because you don't want to die that death of 1,000 cuts where you're like, oh, I tried something, didn't work, I took a little bit of a loss. I took a little bit of a loss. And then before long, you're like, oh my gosh, I took a lot of little losses. That could be unnecessary. Don't fight that trend. It's the trout going up Niagara Falls. It's not going to happen.
Exactly. Jim, I want to get back to a point that you made earlier about people, maybe they're still holding some of these former leaders, like your Squares and the PayPals and Peloton and Zoom. If someone's in that position, what's the right move? How do they get out of that, or what should the thinking be at this point? Say, got in 2020 and they've just held.
I think it's time to own up to it. You need to recalibrate, prep for the new bull cycle. And if it's really too difficult to sell off, if you have 1,000 shares, sell 400, sell 300, just start moving it out, adjusting to it, accepting it, and then get rid of all of it.
Yeah.
Because
so maybe I don't have to rip the Band-Aid off all at once. I don't know.
The doctor says rip it off.
Okay.
But if you want to take a minor dose first, that's what I would do. You have to get out of these names. Probabilities, 98% probability they will not return, will not come back. So, and you need capital for the new leaders.
Yeah, that's what I was going to say. Don't forget about the opportunity cost, right? If you're stuck in the old names and then all these new names are out there and you're kind of like still in the old stuff, then you're gonna miss out.
And people will give up, and then we need that. We need these buy the dippers, these Robin Hood traders to blow out.
No one in here, this is a savvy audience here, but the crowd, right?
Yeah, but there's the general crowd of the universe of investors has not panicked. They're speaking. They say I'm bearish. Sentiment is bearish, but they're not acting bearish. The meme stocks went to Mars 3 or 4 weeks ago. The VIX barely elevated yesterday. The put to call's not really gone up. These secondary measures of panic are just not. People are complacent at this minute. That's why I think we are more likely to undercut the June lows, and then we may get a real panic, flush out these people where they absolutely just vomit, like I'm out, I'm done, I'll never come back. Then we'll have a floor in place, maybe. We'll see.
I think you're right. I think it's that I'm never coming back. Like the market's never coming back. I'm never coming back. I'm done. This is a stupid game. I'm taking my toys. I'm going.
Well, I lost. I bought Teladoc at 300. It's at 30.
Yeah.
And this isn't for me. I've lost half my retirement or most of it. I'll never come back and do this. I'm going to go collect Beanie Babies. They'll find the next trend.
Right. So if we are to undercut those June lows, Harold, it does seem like we could then see that third leg down or that third wave down. Do you mind explaining that concept and its significance?
Well, the June lows, that's a lot of things that a lot of technicians are taking a look at. And if we break down below that, that will be a very significant level that's been breached. So that could signal that, okay, this could be a bottom. Now, if it is a bottom, doesn't mean that the market's going to go right back up, but technically speaking, that could be a sign that, okay, this could be a time where, okay, we're going to be looking very strongly for stocks to, bottom fish a little bit, being sentiment turning from bearish to bullish.
So if we do get that undercut, Justin, because scenario analysis is key. We're not, predicting the future here or anything, but if that is in play, what level might we go down to? How much more pain could we see?
Well, we've already experienced quite a bit. So, I kind of look at it as more like a 2011, the 70s, where you kind of have the move down and then there's a lot of back and forth. So again, that can be just as tough. In fact, sometimes tougher because it can suck you in a number of times, just enough to really crush your spirit. So remember, it doesn't have to go down a lot in order for you to lose money. It could be that back and forth that can really.
You're talking about the fourth quarter of 2011?
Yeah. Remember, I mean, when we had the global recession fears, I mean, remember there was the Greece, the euro just might implode. It's that kind of bearishness that, where people are like, oh, the financial system is got some serious issues here, some serious cracks. That's the kind of fear that you get. But in 2011, it's not like it kept on going down. A level held, and it just didn't go anywhere. You didn't make any progress.
Yeah, exactly. All right. Pardon my juice there. All right. And so, yeah, I'm showing 2011 here, that sideways period. Jim, we're all about the beverages here at IBD. Got to stay hydrated, right? So, Jim, I want to get your thoughts on the prospect of a potential third leg down. Could we come back to those pre-COVID highs in that case? Is that a too far of a drop to predict? And if we do see something like that, how do we get short? It seems like you did a short-term short trade. Is that how we should be approaching the short side? What would be the next signal? Because if we can't go long at this time, then how do we make money?
I think when you're in a bear market, if you have a major gap open and say the market's rallied for 3, 4, 5 days or more, especially if it's running up underneath a moving average and you have a gap open and it starts to reverse, I would sell right there. But I would not sell into a 4, 5, 6 days down. That's when people mostly do it. You want to sell into a brief uptrend on a gap up reversal down. But in general, I am not a short-term trader. I just am not. But sometimes they look so good, I can't resist. But you want to know how far it can go down. If you pull up a monthly on this and draw the long-term uptrend line, it comes right in at 10,000.
Yeah.
Starting, what peak would you like
the
to
low,
start
the
at?
very lows
The
go
lows. The lows
right
here.
there. Draw it all the way up. Look at where that comes in. And the S&P comes in at 3,000. Oh no, you got to move that down. There you go.
Sometimes, Chris wants it a little tighter, or, David Ryan.
They're creative trend line drawings.
Yeah. A little bit of an art to it.
Yes.
So I'm trying to get the vibes from Jim. Where does he want me to draw the line?
Well, you'll get some panic. You undercut those lows. There's probably a lot of people who are saying that's my line in the sand and and shake them out. No, it doesn't have to. It could be, we could skip along the lows. Again, this all depends on the Fed. And I mean more so the Treasury. Liquidating the balance sheet is $9 trillion. They're causing a dollar shortage in the world. They're dumping the treasuries for dollars. Foreigners want to buy dollars so they can convert to buy our treasuries. So there's a squeeze in the dollar market. And so there's a lot going on right now.
Yeah.
And just another level that you mentioned, Ali, you mentioned that high right before COVID, right around 9,000, 9,800. So
on the
NASDAQ, right? So that level that Jim's talking about, 10,000. You just go another 150 down, and you're kind of at the highs just prior to COVID. So that's another level where, again, what used to be resistance becomes support. So
we'll have to see. And Jim, I know another draw the line level that you have talked about is from the highs. We've bumped our heads up against this declining tops trend line here. So that seems like a pretty major hurdle that we want to see the market get above before you would start getting bullish, or what do you think about? So let's talk about levels on the upside now. We talked about levels on the downside, enough doom and gloom, right? Let's get some positivity here.
Well,
what if we start rip roaring higher?
You were I think you were right. You need to ellipse that high, the last high. I can't see the NASDAQ. So that's what, 13,181. But I would not wait if we had a follow-through day lower. Actually, the follow-through days that become life changers usually occur below the 200-day. In other words, the damage has been so great. But it must be accompanied with what you said, is a plethora of new leaders, and they will be there. Entrepreneurs out in their garages right now with test tubes and software, they don't care there's a recession, and they're trying to create
change
something.
The world, right?
And they're going to come public. And they're going to have massive sales, massive earnings. It's going to make a new high. You're going to have a follow-through day. And 15, 20 of these basketballs are all going to pop up. It will happen. It's definitely going to come. this is a moment of major opportunity in the making. But patience,
Yeah.
which is one of the most difficult things for people, especially people drawn to the stock market, they want to click that mouse.
Mhm.
Right.
It's hard to be patient because the answer is yes, we must ellipse that high, but I will get involved before that if a follow through day emerges with corroborated by leaders.
Right.
But that's asking a lot. New lows are streaking higher than new highs every day. That we're a long way.
Yeah. So it seems like it's okay to be bearish as long as you have that flexibility to change your mind and not be stuck in a thesis.
If you're dogmatic in the market's going to run you over. If you say, this is my position, I believe in it firmly, and the market disagrees, you are about to get hit by a tidal wave. I don't jump in front of trains.
I will wait for the market to agree with me.
I want
Right.
I want to surf the wave. I don't want to be drowned by
Yeah.
it.
Exactly. Before we move on, Harold, let's just quickly define exactly, let's give the specs of what exactly is a follow through day. We've talked about it a couple of times. So it is a potential signal for the upside, but what exactly, percentage wise, the look of it, what should we be keeping an eye out for?
Well, once we're in a correction like we're in now, we're looking for a signal to get back into the market. We have what a process called the follow through day. So follow through day typically occurs 4 days after we have an update. So if, for example, if we had an update today, that's what day one of attempted rally, we're not going to get into the market until at least 4 days out. We want to see the market prove itself. On that fourth day or later, we look for a follow through day where we look to see one of the indexes, whether it be the S&P 500 and or the NASDAQ, up at least 1.2% or more and on higher volume. So that constitutes a follow through day. But like Justin said, we can get a follow through day, but
Not a
if
guarantee.
no stocks are setting up, okay, it's a good sign that we have a follow through day, but we're not going to jump into the market and just buy things blindly because we had a follow through day. We saw that recently, but I'm going back to COVID in in April, where we had the follow through day, but there wasn't a whole lot of stocks setting up, and all of us were kind of, well, is this follow through days going to work? Well, we didn't go by what we were thinking. We were going by what the market was doing. So we kept an eye on the market. Stocks eventually started setting up. We started buying.
Mhm.
Now, back in 2000, just to go back a little bit
Even
further,
further.
back in 2000 to 2003, there were over 20 follow through days, in that time period. And some of those rallies were phenomenal. I mean, you had a 40% rally in the NASDAQ that started in September of 2001 and, peaked around January 2002, 40%. But it was still in an overall downtrend, right? When you look at what happened and the NASDAQ came off 79% from its peak in March of 2000. So, you have to just be aware that, again, when you don't have the supporting characters,
Right.
you're asking for trouble. And, maybe we should get into this. So once you have that supporting characters, how quickly and how heavy do you go in to kind of say, okay, this one, I believe this one. I've had all these imposters, in the past. And now this is the one.
I mean, lately I've been testing. I mean, literally, I'll go in with literally 1/4% of my whole account. Like I might buy a couple, just tiny little bit.
Right.
When typically, for context, you're more concentrated than that.
I'll put my whole account in 5 stocks and go 130%
Yeah.
in a raging,
Right.
euphoric environment.
Mhm.
But I want to back up just a tiny bit. People making excuses. We have a follow through day. They want to do something.
Yeah.
I'm a professional trader, so I have to trade to validate that's my position.
Right.
So they make excuses for not enough leaders. Like we all knew there was 4, 5. That's not enough to support the market, but people go in anyway.
Mhm.
Now, if Celsius is kind of breaking down a tiny little bit, and it is on volume below the 50. Well, if you have 1/4 of your account in that stock and you blow it out, who cares?
Right.
It's not germane. It's not going to
It's not doing
damage.
damage. Yeah.
And besides, the stock shouldn't be breaking down the underside of a digestion. Now, it might be a shakeout, but if you get shaken out, who cares? If the market recovers and it blows through the top and we get a follow through, that's a major signal of strength. Right now, it's a signal of weakness.
Mhm.
But there are only, when you have a little kid and they say, Dad, can I sleep over on Wednesday night at my friend's house? And you go, no. And they go, special occasion? Yeah, okay, but there's one per year.
Right.
Not every follow through day. Okay, you get one. John Boyk's book, he has a paragraph. I tweeted it out the other day, or maybe he did. It's fantastic on making excuses to get in the market. And it just, patience is so hard, but you have to issue them in the market.
I love this discussion, guys, but let's take a look at some stocks and get some more chart analysis here for those individual names. This is from the audience virtually. We have Diego asking us about STNG Scorpio Tankers. What a move here, Harold. Talk about relative strength. This stock has seen an explosive move, but what do you think about it here? Is it too late in the move? I mean, this stock is saying, bear market, schmear market.
Yeah, definitely.
Really standing out.
Yeah, exactly. If you look at this stock is saying what bear market? It's it's been on an uptrend. You look at all those blue weeks going back to July. I mean, you have all these blue weeks. The stock has been up just consistently, riding that 10-week moving average on the way up. But as far as an entry, there isn't one. So this is a stock we have to wait to see. It pull back, set up another base.
Why
set up
not,
another
Harold?
base.
Why is there no entry?
Well, there's no entry. Well, the bottom line
Let's see. It's about 7.5% above the 10-week line, but it hasn't really paused very long. So the odds of success go up if you see strength. Yes, we want strength, but some sort of pause can help us find, can help you find a better time to get in. Can you explain that a little?
A pause, maybe we have a pattern we like to look for. It's called a 3 weeks tight. It's a pattern where the stock will, for 3 consecutive weeks, the closes will be about 1 to 1.5% of each other. That's a sign that, okay, institutions are in it. They're selling part of the position, but they're not running for the exits. So you want to see something like that, or maybe a pullback to the 10-week. What did you say as far as the percentage below?
7.5%.
7.5%. Okay, that's right at the edge. When you get to 7.5% above the 10-week, that's considered extended. So, but this is a stock you want to have on your watch list.
Jim, what are your thoughts on oil and gas stocks? I mean, they've really been standing out this year in that outperformance category. So are there still opportunities to be had in this sector?
I think there are. I think the oil and gas energy trend is real. And I think it's going to persist for, now I'm telling the market where it's going to go. But that Scorpion, whatever it is, buying strength in a bear market is asking to be kicked in the face. I mean, it broke out there's no buying off a 2 or 3 weeks tight is an add point. It's not a start a new position point.
Maybe in 2020, you could have gotten away with that,
Well,
right?
it means that your sales in irrational exuberance markets, you can get away with it, but this is a bear market. So yeah, this thing has great relative strength and the pattern is very nice uptrend, but it could pull back 10, 15% and it'd be perfectly healthy and you'd be stopped out. So, but going back to your original question, it's funny, like the Devon Energy, now it's probably been broken down since I looked at it last, but a lot of these stocks are just digesting. There's a very big cup and handle. I don't think the accumulation distribution is very good here, but there's a lot of oil and gas stocks that look like they're just working off excess from that huge run. And, commodity cycles are historically multi-year cycles. Doesn't mean it has to, but I do believe this is a good place this year, there's been 2 trades.
Yeah. Energy and short.
Boom. Until that changes, you have to be a bear.
Yeah. So you talked about accumulation distribution. Basically, poor accumulation distribution means more selling than buying, right? Talk to us about the significance of that when we're analyzing stocks.
It's just a measure of volume on up days versus down days. If you have extremely heavy volume on a down day, the accumulation distribution is going to be bad. And if you have a lot consistently, one day is just like a Mother Teresa day. It could just be a great person having a bad day. But heavy volume on the upside repetitively is going to give you a great number. And so these stocks are still a little distributional at this minute, but we'll see.
Yeah. So Justin, for many of these energy stocks that we're saying, like Devon, like many of the other ones, if they are forming these base patterns, these structures, these pauses, they are a little bit later stage at this point, but could be more room to run. but also maybe a little later in the cycle? How do we know if there's more gas in the tank? Am I right, guys, for these oil stocks?
Yes, and the
Well, I mean, yeah. So yeah, it's one of those things you let the market tell you, right? It's if it forms that base and it breaks out, look, you can have late stage bases that go up phenomenally. You know, just because it's late stage doesn't mean it's done. So if it does break out of that base, and you know, why do we look for bases? Why do we look for these patterns? Because you said the word odds, right? We want to have things that put odds in our favor, and we want to be able to kind of make our, okay, if it does this, then it's acting right, and if it does this, it's acting wrong. It kind of gives us levels and scenarios to go through. I mean, when something is bouncing off the 50-day moving average line, you kind of have a line right there that, hey, if it goes below that, then I was wrong, you know, and that's what you need. You know, you need that discipline. So I'm okay buying a late stage base as long as I can say, okay, if it does this, then hey, maybe this is a breakout failure and now it's done, or it continues going up. Maybe I have the finger on the trigger a little bit longer, but it really does come down to discipline. And that's one of the things about a time period like 2020 that goes up so much. You don't need discipline. You know, you can throw a dart and make money. You can just, you know, you don't need to buy out of bases. You can just buy because it's up and you'll do fine. I started in the late 90s. I didn't have discipline. I was fresh out of college. I didn't need it, you know. But then 2000 to 2003 taught me what discipline, you know,
Right.
where that comes in.
Yeah,
Right?
and maybe this bear market teaching investors to, if they didn't experience that bear market, this experience is definitely helping shape us and building that discipline that can really help us make life-changing money in the next cycle. What do you think, Jim?
I think that this prior bull market, this COVID Fed-induced quantitative easing bull market, took a whole lot of college kids who got a $2,000 stimulus check and went to Robinhood and sent the market to Pluto. So they're more gamblers than I'm trying to save for retirement. Like, this is real. This is a real business. Money is real. And there's a large constituency trading in this market. Now, a lot of them have been punished brutally, but they're still here. We need to rattle these people out. And I can't tell the market what it's going to do, but until these guys are shaken out, that we're going to see crazy volatility, and we're going to see things that do short squeezes. It's going to take time. And again, I'll change my position. I'm not short the market right now, but I could be, if we had a follow through day, I could be 50% long 3 days post that.
Yeah.
Wow, that's.
And I could be 120% long 10 trade. I mean, that would take an incredible strength and leadership, and I mean a complete personality change. But you have to be nimble, absolutely, because the bottom is going to come, and most people have been like the bull market conditioned you in the 90s. You said, right?
Yeah. Well, the 2000
okay.
2000 to 2003. That's what conditioned me. Like, oh man, this
this bear is conditioning the opposite in the global psychology of investors. Sell, sell, sell. It's a bear market. It's never going to work again. That's what's coming, and what's going to happen is these new leaders, these TMLs, are going to come out, and they're going to go 20, 30%. And people are going to go, I have to capture that to soothe myself and regain some of those losses I made. And that stock,
like fuel for the fire, right?
Yeah, absolutely. But and then that stock's going to go up 1,000%. The first one's out into the new highs. Most people are going to sell because it's their first gain in 2-3 years. And that's going to be the one that's going to go to Mars. And there'll be a lot of them, lots and lots. And most people will not make money on them.
Well, and one just other good news part for this, I mean, for me at least, when it was the 90s, and then I had that rough period in 2000 to 2003, at least it was with small money, right? You know, it was early in my career. So for some of these college kids that maybe started in 2020, the good news is some of those, they're going to learn their lesson and, you know, stick with it and say, okay, I'm going to really try and make this work. I mean, I certainly had the benefit of, I was working for Bill O'Neill at the time. And so I had this big optimist, yes, the founder of Investors Business Daily. So I was his assistant. And so I had this, you know, big optimist, you know, telling me, hey, it's going to be okay. We're going to come out of this one day. And that was after. And
we are that for you all out here.
Right.
So moving on, let's take a look, Harold, at CCRN, Cross Country Healthcare, another stock that we've been watching maybe a little wild in the last couple of months here, taking a hit today, down about 4.4%, but it's above many of those shorter term moving averages. So what do you think about this one for the watch list, should it be at the top of the list or in the maybe pile?
I'd put it in the maybe pile. Good sign, it is above the major moving averages, the 50-day, the 21-day exponential testing, the 10-day, which is the pink line on the chart. But as far as relative strength, it's got some good relative strength. What I don't like about it is it's just done nothing. It really hasn't done much in about a year. So
Going over
it would be on my maybe list. I think there are better ideas out there.
Mhm. I feel like sometimes it can be tricky between, seeing a stock going sideways, maybe not really outperforming the market, but at the same time, maybe that could be that coil winding up. David Ryan, one of the investing experts we work with a lot, a weekly panelist on IBD Live, likes longer bases because sometimes those longer bases really can pay off when a stock eventually does break higher from that resistance.
Right. So that's why you want to have it on a list, if you call it a maybe list, whatever you want to call it, because it is showing some signs of relative strength. We look at that blue line on the chart, that's telling us that it is outperforming the S&P 500. So that in itself is a good sign. That's definitely something you want to be looking for in a market like we're in. But I just don't like David Ryan likes to see those long bases. Me personally, I think there are better ideas.
I mean, there's a lot of nuances. I'm not saying that that this is a top pick by anyone out there, but just the concept of those longer bases. I know there's definitely a lot of nuances there. Okay, let's talk about some EV stocks, shall we? Who is in any EV or battery related stocks right now? All right, I know Tesla. Who has had Tesla in their portfolio at one time? All right, seeing a number of hands there. All right, Jim. So let's start with that. We'll talk about not only Tesla and some of their EV stocks, but also some of the battery plays and on the commodity side. But first, with Tesla, Jim, what are your thoughts on this big popular stock? Is it coming back to life? Talk about long sideways action. It looks like that's what we've seen for Tesla for quite a while now.
I think Tesla really, really embodies the magic elixir that Wall Street desires so strongly. The key variable for a major hedge fund or a major institution is massive liquidity and massive earnings growth. There's nowhere else in the market you can go. Today, it's already traded 16 million shares. It trades an average of 60 million a day at 300. That is, you could go buy 500,000 shares and move it 10 cents. You're going to get, they're estimated to earn $84 this year, or 80% growth this year, and followed up by 45 next year. That is the embodiment of the magic elixir. The issue is we're in a bear market, but the pre-tax margin has gone from 0.6% to 29. The after-tax margin is 15. This is an auto manufacturer. Sales growth 42%. They have a tiny sliver of a market that is exploding. It's also a multifaceted company. This is an institutional darling, and it's mouthwatering. But until we get out of this bear market, it doesn't matter. Like, it was charging up to the 315 buy point, and the bear just brought it down. Like almost every stock we've looked at, except for the tanker stock, has been ruined by the bear.
Yeah.
So there's a time to. This is top of the watch list.
All right, yeah, because I want to clarify that this would be at the very top of your list. Is that what you're telling me? I mean, I'm hearing things like magic elixir. That's pretty enticing.
Well, it's rare. There's no secret formula, but if you're an institution and you're running $40 billion and you want earnings growth, you cannot buy $1 billion market cap. And most of the stocks that are discussed by people are 1, 2, 3 billion. They're micro cap stocks. There's no way Fidelity's looking at that. Okay, Ray Dalio's like, no chance. It's not on the radar screen. And if you don't have them in there, there's no support. The volatility will be all over the place. You might make money, but at what cost to your stomach? The Tesla is liquid. When someone wants to dump 1 million shares, dump it at the market. It won't move. Right. So I really like it. But it's proving itself. Not at this minute. Now, again, in the 2000 bottom, there were a couple stocks that came out before the follow-through day because they are true basketballs underwater and they just cannot stay down. ERES was one, I think, was one of the big ones. This may do it because institutions have to go somewhere.
Mm.
We'll see.
So if it gets above 315, that would get you interested, Jim?
I would be inclined to, I have a tiny little guppy microscopic position. And if it goes
Sea
to,
monkey.
yes, it's a sea monkey that hasn't grown.
Right.
So then what kind of position would a move above 315 warrant?
If it was the isolated stock moving against the world,
Yeah.
I would maybe take it to 1% of the whole count. But if the general market turned up, we had a follow through day, or God forbid, this came out and 4 days later we had a follow through day, I might, depending on the overall, it's not black and white.
Of course.
It's otherwise a computer program would be the greatest investor in the world.
Yeah.
It's an art. So you work in, you work out. As the stock treats you, you treat it. So I have a minor remnants of a position I got stacked out of.
Okay, well, we'll keep an eye on that 315 level. Let's take a look at some other stocks in this theme, like the lithium stocks. So Justin, let's have you take a look at Livent. This is in the specialty chemicals group. So on the commodity side, but also an EV play, that seems like a good intersection to be looking for potential stock ideas, given how a lot of commodity stocks have been performing, or at least did perform maybe a little earlier in the year. But this area of the market, especially chemicals, this name and some of its peers look like they are perking up.
Yeah, and I should disclose I do have a position in this myself, and I'm up on it still, and it's small.
So then, where was your entry, Justin? Where were you getting into this?
Well, so there were two places. You know, the basically the bounce off that green line that we had. You know, there was on the 23rd of August. That was an area. I didn't do too much there. I added a little bit the next day, but then it came all the way back down. You know, and so it was like, oh, maybe, you know, so I scaled back a little bit, then it bounced again. I bought a little bit back, you know, and again, this is just very small amounts. So right now I'm kind of using that green line, that 21-day moving average line. It's kind of my line in the sand, but it's back to Jim's point. You know, if this really starts tanking in a big way, I mean, I don't like losing money, but it's not an amount that's going to make me cry or, you know, have to tell my wife, you know, it's that kind of thing, right? You know, when it gets to a certain amount, then I have to tell my wife, but that's not an amount that I have to tell my wife, you know, so.
We'll let you.
Right, exactly. Now, this doesn't have to be a family therapy, right? But look, the relative strength line is still, you know, very, very strong on this, and it's got other members of the group. You know, you got Albemarle, you got, you know, SQM, you've got a lot of other names in here that are also looking pretty strong. And, you know, this is another one where you look at the growth. This has triple-digit earnings growth. You know, all of that blue on the bottom there, that's stuff we pay attention to. All of that blue for the revenue growth, you know, triple-digit there. Pre-tax margins very high. And there's a lot of stocks now where we're seeing estimates coming down, right? And getting a little bit uglier. So this stands out in that the estimates for this year and next, I mean, this year triple digit, but next year still double digit. You know, that's not something you're seeing in a lot of places.
Well, what about for those investors who didn't get in when you did, Justin? When might be that next opportunity on the chart here to get a little microscopic mini little nibble of a position?
I mean, you know, I would probably prefer a little bit more of a pullback. To me, buying off the 21-day moving average line is not typical, right? And so
But that's what you did.
what that last one had going for it is that it was part of a cup with handle, right?
Exactly.
So
Not
I had,
after it's been on a run.
yes, exactly. So I had kind of this and this. So again, when you have kind of multiple reasons, that can help you out. But right now, it would just be a pullback to the 21-day. That's usually not enough for me.
So what then, if it continues to hold here, move sideways, get that 10-week line to catch up to the action, could that be a spot?
Right. That's one thing, because then you've got this base, and really it was kind of a neighbor base, right? We had a base before, and then another base right next to it. So now we've kind of got this structure, and it's still, look, it's still early here, you know, so you know, when you look at that overall line that you've drawn, we're still there. This isn't one that's like super extended. Oh, this has been running for, you know, a long time, but, you know, it has come up quite a bit from the bottom there. And I do like to see stocks pause. I love to see a stock pause a little bit, tighten up, and that to me gives you like another chance. And so for me, that's where I could potentially go in with size if the market improves and all of those other things that Jim was talking about happen.
Great. Thank you, Justin. Harold, let's have you take a look at LIT. This is an ETF. So this is a way to play the battery tech theme. In addition to looking at individual stocks, sometimes if you don't know what that leader is, maybe you go with a thematic ETF. That's what we did with solar stocks. So a quick aside here, here's a look at TAN. Huge move in 2020, but maybe a short-term move here recently. Investors could have taken advantage of with a number of solar stocks looking hot. But back to LIT, is this battery tech ETF ready for prime time?
I don't think so. You look at the stocks trading, where it's trading below the 200-day, that's the black line on the chart, and it's declining 200-day moving average. So this stock would have to get up above the 200-day and do so on some volume before I would consider getting into this stock or ETF.
All right, Jim, a question from our Zoom audience on FREY, Frere Battery. Look at the move this week alone, up 15%. Does that kind of strength get it on your radar?
Yes, anything with a relative strength of 99 is going to be on my radar, but they're losing money. It is a $1.8 billion market cap. It's grossly extended, and we're in a bear market. I'm just cranky, okay? I'm just a cranky guy. And it's so odd because I'm normally the most optimistic person you're ever going to, most people like, he's Pollyanna, you're a perma bull. I am until we get in a bear. So I just would, well, first of all, it's very extended, and it never really gave you a real legitimate buy point.
Cut opportunity to get in.
I really look for those. And I have to give two shout outs because I'm getting text up here like crazy.
Okay.
Eve Bobach, who runs my small cap fund, has held Tesla since 2000. And Eric Kroll gave me the stats on durable uptrends and life-changing follow through. So I want to give credit to both those guys.
Yeah, awesome. Yeah, so here's a look at that big Tesla. And so you meant since 2020, she's held
Yes,
Tesla,
what did
right?
I say, since 2000?
2000.
It wasn't public.
Exactly.
Got on real or
Yeah, yeah, she was, yeah, getting in there. All right, well, fantastic move it's had since 2020, no doubt. So I know there are some people out there when you are talking about the EV market, they're like, well, why buy, these EV battery plays when really Tesla, that's the big dog, in the group, in the theme. So can we look at some of these other maybe picks and shovels kind of companies if they meet our other criteria, or is it just not even worth spending time looking at those if Tesla could be making another move?
My answer is always, always, always go with the one. The second, I did in my study of TMLs, I proved
True market leaders, patent pending. No.
The difference between the number one stock in a group, first of all, almost all the true market leaders are group moves, almost every one of them. And the leading stock generally doubles the performance of the second best. And Tesla has everything.
Doubles. Let's pause there.
Double. So if
the performance of the second
if
best.
the leader goes up 400%, the second best goes up 200, which is still good.
Yeah.
But the leader almost always invariably has the magic elixir of the incredible liquidity. And so, no, I would really, when you truly identify the one, and there's one of five in that sector, figure out how you're going to get in. Okay. First of all, you have to know the fundamentals. We talk about pivot points and buy points and all this. That's the beginning. Okay. How you can get in and how you sit with it, that's the real game. Anybody in this room, anybody who's a computer can screen for RS and group strength and all that. The list is well known. Bill wrote the book, but how many people handle them well once they have them?
And you're referring to Bill O'Neill's book, How to Make Money in Stocks.
Right. Yeah. I mean, Bill traveled the country for 30 years, speaking to rooms of 200, 300, 400, 500 people. And I would say in every room, only about 4 or 5 people really embraced it. And the whole the whole process, not just buy points and relative strength. It's the fundamentals. Why is this stock going up? What's going to give you the confidence to hold for the 94.1 weeks?
Mhm.
Most people hold stock for 3 weeks.
Mhm.
Yeah. How many stocks triple in 3 weeks? So they're doomed.
Yeah, yeah.
I mean, and people take all their losses late. They let them go down 50% and they take their gains up 10.
Mhm.
That's a formula for disaster.
Yeah.
Well, and you can certainly make money that way on the short term, compounding it out. But there is, let's just say, a less stressful way, that you're talking about when you kind of get it right. You add, you get some size, and then
I don't know
hold.
about less stressful. I mean, I don't know. It's
Well, if you're doing it right and you've got rules behind you, there is a certain amount of stress that is reduced for you, because once you have that cushion,
Right.
and this is something that Bill used to always say, you act differently when you have that cushion, psychologically. You can let it come in a little bit and it just doesn't bother you as much, as opposed to when you've just gotten in something and it does those wiggles.
Right.
It's completely different.
And Jim and I will be talking about that more in our conversation in a little bit later. So I want to get back to some more tickers and questions from the audience here. Jim, this is from our virtual audience. Someone wants to know, what stocks are you going to be looking at in the next quarter for earnings in terms of those market bellwethers? I guess maybe other than Tesla, are there others out there that you're keeping tabs on?
Well, I always watch your heavy market cap stocks, always, because I want to have an idea what the jump, like Apple's been pretty resistant to this downturn. I think it just was rebuffed at a moving average, but Microsoft is looking really ragged here at the lows. Google's looking very ragged. All of the top like 7 market cap NASDAQ stocks equate to like 35% of the index.
Right.
You just have to be watching those names. And if you get one of these, like I remember a million years ago, we were in a bear and Amazon comes out, blows the market away with earnings. And I went long immediately. And from then on, it was like it set the tone for the market. And it was now saying the market is going to support big beat and raise quarters. It just changed the tone of the whole market. So I watch all the gaps, and not just, I don't really care about micro cap stocks at all, but the big names, I want to watch them very carefully, all of them.
Okay, good to know. And Harold, a ticker that you highlighted at the beginning of the show that we should check in on is ticker WM Waste Management. Looks like it's testing support at the 10-week line. If we see a bounce from that level, is this something that you might be buying? Why or why not?
Well, buying, I'm not quite sure about that because of the market, but what attracted me about this stock is not only at the breakout, it broke out. Breakout didn't really work, but it consolidated for several weeks. And then as the stock was consolidating, you see that 10-week moving average rising up with the stock. That's very attractive. I like seeing that type of technical action. The stock does have a lot of the fundamentals we'd like to look for. So it's on my watch list. Doesn't necessarily mean I'm going to be buying it. I do like the relative strength. Relative strength line is also very strong. So this is the type of thing you want to see in a bear market or declining market that we're in.
And I mean, in terms of excitement here, I mean, Waste Management is no Tesla, but group number 13 out of 197 for pollution control, that's a very strong group rank. And if we do see group moves, I mean, maybe this group rank is, something to sneeze at 13 out of 197. Harold, what do you think about the group strength that we're seeing?
Well, the group strength, yeah. I mean, pollution control, that's not gonna, like you said, it's not exciting.
But I guess if you're thinking about ESG, maybe there's some sort of tie into that, perhaps.
Perhaps, I really don't know. Like I said, I looked at stock tactically. Again, I look at the fundamentals. I haven't dug into the company as to what exactly they do, because it's on my watch list. I'm not looking to buy it right now. So I've got some time to really dig in and see, okay, what's this company all about? Because it's the story behind the company that's also going to be cause for a price move to the upside. It's not just the fundamentals, not just the technicals. You got to have that story behind it. So it's a bunch of pieces of the puzzle you have to put together for stock to make a move like.
All right, and we'll quickly get to Chipotle and Shockwave for both Justin and Jim, and then we'd love to open it up to the audience for some ticker suggestions for our lightning mode, and to our virtual audience as well. We would love your ticker suggestions, so send them in. But first, Justin, let's take a look at CMG. Chipotle down almost 5% this week, but touching that 10-week line. So maybe it'll find some support there. And as you mentioned at the beginning of the show, it seems like revenue next quarter might get a boost just from you alone.
Yeah, that's right. Exactly. That's what I'm here for. You know, just look at my belly. Okay, so we
Hey,
got
think healthy stuff too.
right.
That's
Yeah. I've been getting the salad. So
Yeah, there you
I'm
go.
working
There you
on it. You know, but this is also something that you were seeing a lot in this market is these breakout failures, right? So we just had a decent looking pattern, you know, a long pattern. The depth was a little bit up there, pretty deep, 39%. But you know, it failed, and that's what we're seeing a lot of right now. So you have to be, again, patient. That's why you don't want to go in with a huge amount of size right now. So I don't think it's broken at this point. It still seems like it's setting up. But you also do have to put this in the context, if you just go to the weekly or the monthly, that this is one that's been out there for a while. And, you know, a lot of times in retail, you know, especially the retail restaurants, where you get the biggest move is in that expansion phase, right? When they're like, oh, we've got, you know, 50 restaurants and we're going to 300 and 400 and so on. Now, Chipotle, you know, like a lot of retail companies during COVID, did get a benefit from
the deliveries.
exactly.
And
They were
ordering.
innovating, right? So
that may be the next phase.
I mean, that was
growth
something
still playing out.
Well, I mean, you see a lot of blue in the numbers. You know, again, this is one of those where the estimates are still at double digits. The last few quarters still have double digits in the earnings growth, revenue growth. So, you know, this probably isn't going to be your gangbuster stock that's going up, you know, a lot. You know, like your Tesla in 2020. But you know, sometimes you're doing a kind of a balancing act, you know,
In terms of portfolio management.
exactly. You know, so sometimes you have those stocks where, oh, you know what, here's my stocks that I'm okay getting like a smaller 20% gain in. There was one time where Bill sat me down and, you know, he's like, okay, you're treating every stock like you're so good at every stock that you touch is going to be a big winner. And look, I'm Bill O'Neill, and that's not how I do it. A lot of stocks, I'm taking those profits and, you know, quickly, you know, 20% for him. But when you do identify those big leaders, that's where you're
You can
kind of
treat them a little differently.
you can treat them a little
right?
bit differently, and you're looking for more and more opportunities to buy those and get some size in there. So I think this is one that could go up, but you're not gonna probably get that life changer that, you know, Jim's talking about.
All right, well, we'll keep CMG on our radar. Jim, let's take a look at Shockwave Medical, SWAV, coming down to a test of its 10-week line. Looks like it's reversing lower this week off over 6%, but could it actually be a good thing that it's having a little bit more of a meaningful pause here after such a big move?
Yeah, I mean, I think it's just being dragged down by the waterfall of the bear. But I think what's really critical is we understand why is it going up. They have a new device to clear up arterial sclerosis, which is much safer. The addressable market, $6.5 billion. It's just barely tapped. Sales have gone from 10.3 million 8 quarters ago to $120 million. Last quarter's earnings beat by 54%. Sales growth, 116 last quarter. Earnings growth, 6,900%. Now, this is a stock that's being discovered by the market. And if the bear persists, it's just going to get crushed, but it will probably bounce back. This is a company that it's just barely tapped, a massive market. Sector strength is 27 out of 200. Estimates, are you ready for this? They lost 26 cents last year. They're expected to earn $2.55 this year and $3.51 next year. That's like incalculable first year growth, and second year 38. It's fairly liquid. Don't think for 1 second, because this stock has gone up, that it's over. Because institutions have all the money and the big players, they can't buy these $2 billion stocks. They have to go into where the liquidity is. So the PE in a highly liquid stock can be double or triple. They get very crowded. All the institutions have to go there. So I am very excited about this. But in the bear, I mean, it's a dicey move.
Mhm.
But it does stick out because of what you just said, the beat and the raise, that kind of stuff. Whereas you're seeing a lot of, I mean, at least this quarter, it seemed like it was, let's warn and try and, beat lowered expectations.
The anatomy of a monster stock is 6 to 8 beat and raise quarters. If you can sit with it, if you can identify what it's going to be and then sit through that,
Mhm.
it's a life changer. If you can now get 10, 20% of your whole account in it, you're going from first class to private jet. Well, I don't know about, you can go coach to first class all the time.
Mhm.
How about that?
Yeah. So this is one that we should have on our radar with that strong sales growth, earnings growth, as you mentioned, Jim. So maybe a potential buying opportunity down the road. Is there a particular level? Again, a best case scenario. We'll just go with, we're glass half full people, right? So best case scenario, market starts improving. What should we be looking for in terms of getting into Shockwave before it goes off and gets extended again?
All right, I'm going to be a signal here. I would say the best chance here, I am just too bearish, but we're going to get a shakeout +3. The market's going to break down. This thing's going to collapse and it's going to have a 10% up day on volume, way ahead of everything else. And I think that's a risky entry and a kind of a longer shot probability. If that doesn't occur and the market does mature and get healthy, maybe over the big 300, big round number like Livermore would talk about, maybe breaking back above the 50. These are start little guppy positions, but if the health of the general market is really improving, you could get big over the overhead resistance, just over those levels.
Mhm. Definitely. All right. Thank you for that, Jim. Now let's go ahead and get into our lightning mode. So we want to have the in-person audience. If you want to raise your hand and have a ticker suggestion for us. Yes, and we're going to bring you a mic. You get to say your name and what stock would you like us to look at?
Jimmy Sufyan. Can we put Rivian in our stock watch list?
All right, we'll take a look at Rivian. It sounds like a lot of people interested in Rivian. We looked at this one yesterday. Justin, let's have you take a look. RIVN.
Well, it's a big difference, between this, the look of it and the fundamentals behind it and Tesla. So for me, a lot of times it comes down to, show me the money. And right now they haven't yet. So neither fundamentally or technically. So until that happens, hey, it could be the greatest thing since sliced bread, but I want that proof first before I'm going to be getting into it.
Thank you, Justin. All right, Harold, we have a virtual audience question about ticker LLY up today, about 3.6% in some volume as it works on a base. What do you think?
Yeah, it's working on its base, but what I don't like about it is you look on a daily chart, the declining moving averages. So the 50-day, the 21-day, the 10-day, they're all declining and the stock is trading below it. So that's a sign of weakness. I'd be setting alerts for a move above those moving averages that I just mentioned. Until such time, I'm not going to do anything with the stock.
All right. Also, Jim, a virtual audience member wanting your take on GDX and gold. So gold miners for GDX here, GLD. We could take a look at gold. I have a feeling you're more interested in what some people have called, as of a couple of years ago, the new gold, and that is crypto. Jim's got some Bitcoin socks on, so
Right now I have my Bitcoin socks on.
right now. So what do you think about gold?
Can you put up the monthly, please?
Yes, let's get the monthly up here.
I not that long ago called this the Mona Lisa of charts.
Why is that?
Well, that is one of the biggest, most elegant, well-rounded, pristine cup and handles of length that I've ever seen. Now now again, with that unbelievable, spectacular quantification of that, 60–70% of bases morph. So just because you see a great base does not mean you should buy it, because they generally will morph into another pattern. And this has, with the rising dollar, the handle has become pretty droopy, but that is also kind of like a box on the end of a massive, was it a 10, 15, 20-year cup? That comes out of there. Wild horses couldn't stop me from buying it. Now, I will note, this is very bothersome about the general market. You mentioned Lilly. If you look at the leading stocks up, it's Lilly, FCX, Freeport-McMoRan, AbbVie, Enron Oil and Gas, Humana, Health Equity, McKesson, Newmont Mining. I just gave you the top percent gainers on my list. Those are all super uber defensive. This market is, as we're sitting here and
Good
as of
point.
last night, starting to discount a deeper recession. And the dollar must stop going up for gold, the cost to carry for gold to rally and for Bitcoin to rally. I think there's a divergent tangent, may I?
Yes.
The-
Well, you have a spare minute or two for a tangent.
I'm a major crypto bull. They've been pummeled and I know the performance has been terrible, but you have to look at the fundamentals. It's like, why did I talk about Shockwave? Because of the fundamentals. You need to go down the rabbit hole and understand the possibilities for crypto. And if the dollar stops going up and GLD or all those gold stocks come out the top of what was it? How many years is that cup and handle?
I mean, going back to 2011, so yeah, about 12 years or
Okay.
so.
Show me a chart that has a 12-year cup and handle. I would be all over that, but not now. Patience.
Mhm. Okay, well, let's see here. Next on our list, let's take a look, Justin, at CLFD. This is from someone in our virtual audience as well. We'll get to some more in-person questions too in our lightning mode. But what do you think about this telecom fiber optic stock? I mean, if you go back to July and August, that was the time to be in this one, it seems.
Yeah, it was a phenomenal move. And I mean, the market was rallying during that point. So it had that feel of, oh, could this be the one? Could this be the one? And remember what happened in the market as we got turned away at the 200-day moving average line. And this stock peaked almost exactly when the market did. What was that? So just actually a week later. So the market peaked on August 16th and this part peaked on August 25th. So
Right.
a week later. Now, it's pulled back. It's still, if you had this at that entry of 69.33, let's say, you're still up on it. You could kind of wait to see how this plays out, see if it kind of goes back and forth here at 100. It does have the fundamentals, triple digit. This one is lower liquidity though, so back to Jim's point, it's very different when you're looking at a stock that's trading at, 300,000 shares on average,
Right.
getting in and out of that versus something that's trading a few million,
Exactly,
and a higher price.
16 million.
Yeah, exactly. So just, recognize the liquidity difference. But, technically this, while it has come in quite a bit, it's probably worth keeping an eye on, but, this is something where we've also seen some other members of the group. Didn't you bring up Dicom also in the telecom?
Yeah, we looked
Yeah.
at that one yesterday.
Yeah,
So
right. Mhm.
another one to keep tabs on.
This is fiber optics, Clearfield.
Yes.
Yeah. Mhm.
Yes. All right. Anyone else in our in-studio audience have a ticker request? All right. Gentleman here raising his hand. We can give him the mic, say your name and the ticker.
My name is Jay Dara and the ticker is Teva. What do you guys think? It's the
Teva?
#1 player in generics, trading at an incredibly low PE.
TEVA.
Thank you so much. Yeah, Teva Pharmaceuticals. Harold, let's have you tackle that one. I mean, medical stocks, medical sector, biotech names. We've seen some maybe renewed interest over the last couple of months, but and a quick move up from Teva alongside that. But it's come back down. What's your assessment of it right here?
Yeah, so some segments of the medical sector are doing well, but when I look at this stock here, I'm looking at the fundamentals, looking at the sales, earnings are okay. I just don't like what I see, especially with the look at the price action since the market top back in August. This stock has really declined along with the market there. So technically speaking, I really don't like what I see trading below the 40-week moving average at the moment. And then fundamentally, I just don't like what I see fundamentally also.
Maybe also just go to the monthly because that downtrend has actually been a little bit longer than,
Oh.
that's,
Yes. There we go. Yeah, it did have some moves here a little earlier in the 2000s. So there was a time to be in Teva, maybe just not right now. All right. We also have a virtual question on COP, ConocoPhillips. Let's have you take a look at this one, Jim. It's working on a cup with it. Maybe not a Mona Lisa cup with handle, but is this art museum worthy?
It's very elegant. It's symmetrical. A problem is the accumulation distribution is D-. Now, The group is 30, down from 6 last week. Earnings
Just
estimate,
last week.
yes.
So
I mean,
yeah,
that's, look,
taking a hit.
they're going to bounce around. Like, we're having demand destruction in the oil markets, so crude's down. But estimates are for 154% growth this year. And the pattern is very compelling. Accumulation is, just look at all those red bars in the daily. You're looking right, see, I'm copying off yours. It's iffy. The relative strength is almost leading. It's not pristine. The base looks very symmetrical and nice, and it is in a wonderful sector. I think I would watch it carefully. I might nibble on it and see if the crude market comes back. If the Russian situation gets worse, oil could rip. It's a maybe. It's not, I'm cranky. Out of the 5,000,
You get
6,000.
to be picky, right? I mean,
Yeah.
if you have what, in best case scenario market, 5 stocks in your
I'm
portfolio.
going to say no to 5,995 stocks.
Exactly. So yeah, you get the right to be picky there, Jim. Okay, let's have one more ticker from our audience. Yes, we'll get this gentleman here in the front row a mic. Familiar face to some of us up here.
Yeah.
Hi, Townsend here. Could we talk consumer staples? How about Unilever, UL, and maybe how the consumer staples kind of indicate where we are in the economic cycle or the stock market cycle?
Great, thank you so much. Ticker UL, Unilever, Justin. I know it's food package group. You took a look at Twinkies, I know,
Yeah.
for us recently. So how are we feeling about UL?
Well, I think it's just as Townsend said, it's kind of one of the natures of this market is how defensive a lot of the relative strength leaders out there are in this area. Kellogg's, General Mills, we talked about yesterday. And that's not where you're gonna generally get that big growth, right? These are the names that look, they're not generally doing much innovation in cereal. So it doesn't quite fit our norm. Now that's not to say that some of these defensive areas haven't had their moments in the sun, but it's certainly when the market turns, that's not where I'm going to want. But right now, a lot of these food packaged are holding up. Group number 15 out of 197. It's not so much that they're going up as that they're not going down as hard. Right?
Down as much. All right, thank you so much. We have to wrap. We would love to answer more questions, but we've got 30 seconds for each of you for the wrap up, final thoughts, final tickers maybe to consider, but at the very least, what the audience should come away with in terms of how to position. Final thoughts. Harold, let's start with you.
To have some patience and be willing to sit on your hands, stay engaged.
Thank you, Harold.
That sounds like yesterday. You haven't changed your advice in a single
Nope.
day?
Well, it depends on the day. There will be a day
absolutely,
where we
absolutely.
will have
Exactly.
Today is not that day.
Exactly.
day, but it could come. Justin, your final. We'll give our special guest the final word.
Absolutely.
Go ahead, Justin. Quick final thoughts.
Yeah, and don't forget that there's a lot of learning opportunities here. Because just because you're not investing as much doesn't mean you can't be learning. This is a great time to be reading books, reading articles, doing research on stocks that look interesting. So just because you're not buying doesn't mean you don't have to do anything.
Exactly. Jim, it's great having you on the show today.
Great hanging out with you guys.
And more insights to come. 12:10. Make sure you check out our session. Looking forward to that. But quick final thoughts from you today.
This has been not just a bear market, but a very severe bear market. And don't get discouraged. We live in America. Just remember this, 3,000 people last year forsake their citizenship. We let in 3-4 million a year, another probably 2-3 million sneak in. America's a one-way street. It's the greatest country in the world. As long as the golden goose of capitalism is not suffocated by socialism, there's going to be an endless string of Teslas, Blackberries, Starbucks to make a fortune in. And the spring has been crushed right now. It's a massive opportunity is brewing as we're sitting here watching this market go down. And a shameless promotion, subscribe to Grill Stock Mentor.
There you go. Well, thanks so much, everyone, for tuning in. That wraps it up for us today. I'm Alyssa Coram, and thank you so much for joining IBD Live.